Excellencies, friends, distinguished guests, I am Adam Lupel, IPI Vice President, and it is my honor to welcome you to this breakfast event, Financing the 2030 Agenda, how financial institutions are integrating the SDGs into their core business. Held, of course, on the sidelines of the 2019 High-Level Political Forum. Allow me to give warm thanks to Baraka Banking Group and the United Nations Bahrain for their partnership on this event. This event falls within IPI's broader work on the SDGs, which has two main parts. One, which focuses on issues related to peace and prevention, SDGs for peace, we call it, and the other that focuses on partnerships and the private sector, which is particularly relevant to this morning's discussion. What both of these projects have in common is an interest in advancing a shared and practical understanding of how to accelerate the implementation of the 2030 Agenda. And of course, financing and financial institutions are a critical piece of the puzzle in doing that. The 2030 Agenda calls for revitalizing multi-stakeholder partnerships to mobilize and share knowledge, expertise, technology, and financial resources toward achieving the SDGs. Understanding how financial institutions can integrate the SDGs into their core business and how, in many cases, they are actually already doing that will help all of us understand how to best leverage those multi-stakeholder partnerships as one of our goals of the day. We have a lot of speakers this morning, as you can see, so I will be very brief. I will say no more. But before we get started, we will have a brief video message from our partner, from the President and Chief Executive of Baraka Banking Group, Adnan Ahmed Yousif. Please give him your attention.
It's a very good morning to all of you. I consider it my privilege to welcome you all for this all-important panel discussion. I thank you all for your presence today. I am sorry for not being with you all in person. Financing the SDGs is one of the most important topics of our times. There are many institutions that are already taking the lead to bridge the financing gap for the SDGs, and a lot of good work is already underway. I believe we need to tell and listen to these important stories. In fact, one of our objectives for this event is to highlight these SDGs stories from the banking and from the financial services sectors. I believe that there are key sectors for any discussion on financing of the SDGs. For example, we at Baraka Bank are focusing on 7 SDGs that align with 4 of Baraka goals. These are namely job creation, financing, healthcare, education, and clean energy. Our sustainability and social responsibility program seek to deliver our contribution towards society, and this approach is embedded in our business model. This is a work in progress, and as you know, there is a lot more that needs to happen, and we need to work together to do more and achieve more. I encourage you to engage by sharing your thoughts and ideas. I will also like to thank the United Nations in Bahrain and the International Peace Institute and all the speakers for their support and time. I hope you enjoy the discussion. I would like to thank you very much for giving me the opportunities to join you over this video. Thank you very much.
Let me say one more time, thank you to Baraka Banking Group. The roll up there says over 40 years of successful partnerships. We are very proud to be now added to that legacy. Before we get to our panel, then we will have further welcoming remarks. First from Amin Sharkawi, United Nations Resident Coordinator in Bahrain, and then opening remarks from Elliott Harris, Assistant Secretary General for Economic Development and Chief Economist in the UN Department of Economic and Social Affairs, UN DESA. Amin, welcome back to IPI. The floor is yours.
Good morning. Excellencies, esteemed panelists, ladies and gentlemen, it's an honor to be here again with all of you today to discuss the crucially important topic of how financial institutions are integrating the SDG in their core business. And what a better place than New York City to be sharing prospects from such a wide range of actors from the banking and financial sector. I would like to take a moment to express my deep appreciation to IPI. They have been working very hard on this event, as well as our sponsor and partner, Baraka Bank, who we have initiated many initiatives on SDGs and hope there will be more in the future. Dr. Ali and myself have collaborated on several of those important initiatives, and I have no hesitation in noting that Baraka Bank have provided an inspirational model for financial institutions in the MENA region when it comes to investing in SDGs. Now you have not all gathered here today to listen to me, so allow me to be very brief on the remarks. Between now and 2030, achieving the SDGs will require a huge financial resource. Current trends, however, indicate that ODA, Official Development Assistance, is declining. Just to give you some figures, in 2018, ODA reached $150 billion, marking a 2.7 drop from 2017. So the United Nations and its partners are therefore faced with a significant financial gap. In developing countries alone, that gap is around 2.5 trillion a year. At the same time, the private sector is becoming an increasingly important actor in the global development landscape. Private sector financial institutions have become prominent advocates for sustainable agenda, investing billions of dollars every year in sustainability in general and SDGs in particular. While we must continue to encourage the private sector to continue their important CSR initiative, however, the 2030 agenda demands that we go further. We can no longer afford to conceive of social responsibility as a specialized dimension of the private sector. We must find ways to integrate social responsibility into the very DNA of how core businesses is conducted. We must advocate for approaches such as blending finance, green investment, both of while are becoming increasingly popular avenues for the private sector support to the 2030 agenda. Today represents a unique opportunity to advocate long-term collaboration between the UN and the private sector partners. Thinking about the challenge ahead of us, I am often reminded of Einstein's words, "We cannot solve our problems with the same level of thinking that we created them." I have no doubt that this sharing of experience between the global financial institution will foster innovative collaborations toward the achievement of the Sustainable Development Goals and its agenda. Thank you all for being here today. Thank you.
Thank you, Amin. And now we will hear from Elliott Harris, Assistant Secretary General of DESA. Elliott, the floor is yours.
Thank you. Good morning, everyone, Honorable Minister, Excellencies, ladies and gentlemen. It's a real privilege to be here today to talk about something that I've been involved in now with increasing intensity for the last 5 years. When we came together in Addis for the Financing for Development Conference, it was clear that the financing of the Sustainable Development Agenda would be dependent on private finance. We knew this, and it was integrated into the agenda itself. What is surprising, and I guarantee you that none of us who were at the time involved in preparing the Addis conference, preparing the SDGs, actually negotiating, none of us expected that this agenda would resonate as strongly as it has with the private financial industry. Now, in the interest of full disclosure, I'll tell you that prior to taking on this position here in the Department of Economic and Social Affairs, I was across the street as head of the UNEP office, the UN Environment Programme, and I oversaw all of the financial sector activities that they did there, and that includes, through UNEP Finance Initiative, the partnerships with the banks, with the insurance companies, with the stock exchanges, with the institutional investors. And what has become clear is that for the private financial industry, the Sustainable Development Goals are becoming increasingly a business proposition, a value proposition for private finance. And the reasons they do that, the reasons they are integrating sustainability more and more into their business operations, their investment decisions, are basically three in nature. The first one is it helps in the management of risk. Many of you will be aware of the work of the Task Force on Climate-Related Financial Disclosure. It was chaired by Mark Carney and Mike Bloomberg under the auspices of the Financial Stability Board. That made it clear that climate risk is a risk also to the balance sheets of financial institutions, and they are taking steps now to identify that risk and therefore be able to manage it. Regulators have also declared interest and shown greater interest in managing the question of risk or seeing how it is managed and in enhancing and encouraging the disclosure of these climate-related risks. More importantly, I think, is that investors are starting to realize that environmental degradation, climate risk, all of these environmental questions are increasingly a source of risk to their core business. And they are asking for the information from the companies in which they invest as to how these companies are taking these questions of risk, environmentally related risks, into account. So this is making the unsustainable investment increasingly unattractive to institutional and other investors. The second reason why the SDGs have really got a foothold in the private financial industry is because they're a good business opportunity. The SDGs require a tremendous amount of new investment. We have to change the way in which we produce and we consume. And all of that investment is indeed a huge opportunity for private finance to invest and make a good return. We see a lot of new products being created. We have green credit guidelines, but we also have green loans and green bonds. Amin was talking about those a little earlier. And these are innovations that are happening to respond to a demand that is out there. We have growing investor interest in impact investing, as we call it. 4 or 5 years ago, impact investing was a niche phenomenon. There were a few highly motivated private individuals who wanted their own investments to generate a return that was not just financial, but that had an impact in some social or some environmental outcome. It's no longer just a fringe. We find impact investing being part of the core business of Morgan Stanley, and that's as capitalist an institution as you're going to get. It's driving investments in all parts of the private financial industry. And there is a lot of work underway in trying to find out, well, how does one measure this impact and how can one best enhance it? Now, what is happening here is that more and more the private financial industry is positioning itself to take advantage of the Sustainable Development Agenda and the SDGs as a core part of their business, but also as a part of the way in which they present themselves as being responsible corporately with corporate social citizens. In September, we're going to see 2 initiatives launched at the high-level dialogue on financing, which I think are symptomatic of what we see happening here. The first is a network of global investors for sustainable development. That's a partnership bringing together chief executive officers of enterprises active around the world. And the idea here is to promote the engagement in corporate governance around the SDGs as a platform for learning, exchanging experience, and encouraging investments in the kinds of long-term sustainable projects that we need to have. The second one, which is perhaps even more important, is that a group of banks are coming together, international banks, to launch the principles of responsible banking. Now, these principles, there were 28 banks who came together to formulate the principles. Together, there are 65 banks that are signatories now, with over $30 trillion in assets on their balance sheets. And the principles intend to align banking practice, banking goals, with the goals expressed in the Sustainable Development Agenda and set benchmarks for what it means to be a responsible bank in that context. Now, these are things, I think, these are developments that have not been ordered by governments. They have not been encouraged by regulators. They have been set up as autonomous initiatives by the private financial industry itself. And we see more and more institutions of the private financial industry, institutional investors, insurance companies, stock exchanges, getting actively involved in making sustainability the basic foundation of the way in which the financial industry operates. Is it there yet? Are we 100% sustainable? No, we're not. There are still things that have to be overcome. The first is, if it is going to be private finance, it has to be directed toward a project that is bankable, that has the information that generates a return. Otherwise, it is simply not something that the private financial industry can contemplate. So the first problem that we have is to ensure that there is a pipeline of bankable projects that are sustainable and that generate a reasonable return. And that pipeline of projects has to be of sufficient scale. If we want to invest the $2 trillion per year, we cannot do it $100,000 at a time, will not work. There isn't that much time in the world. And so we need a mechanism for consolidating projects to bring them together to a certain minimum size. We need to have asset management facilities in place so that the investor doesn't have to necessarily go and manage the project himself. And we need de-risking facilities that will allow the first obstacle to be overcome. Blended finance is one such, contingent guarantees are others, and that speaks to a role that the public sector can play in facilitating this finance. The second problem is, as we talk about sustainability, we are talking about longer term investments. These are not 3-month or 6-month investments. Often they are infrastructure with multi-year horizons. The private financial industry today, as a result partially of the changes that had to be introduced after the financial crisis, it is very, very firmly oriented to the short side of the maturity spectrum. And that requires that there be changes in the regulation and oversight of the financial sector so that banks and other institutions can engage over a longer term without paying a financial penalty. And the third problem is that we still spend far too much of our money and our investments on unsustainable activities. What I heard someone explain it as today is we're investing the green on top of the brown. And what we really need to do is to shift the incentives so that it becomes less attractive to invest in things that are non-sustainable. And as we manage to do that, we'll find the whole flow of investments shifting towards sustainability in a way that will accelerate our progress towards the SDGs. Those shifts in incentives, they are a call to governments to act. Governments have the ability to set incentives in a way that makes it difficult or unprofitable or just downright unattractive to spend the investment capital on things that we know we cannot sustain. And so that indeed is one of the big challenges that we face. Politically, it might be difficult to make some of the difficult decisions that have to happen. But we think that as that happens, the private sector is now equipped and is ready to respond to those shifting incentives and to move the flow of finance into sustainability. Thank you very much.
Thank you very much. And I think what Elliott, if I may, said really sets the stage for the discussion that we're having this morning. First of all, thank you so much for coming this early to IPI. It's humid, so if you're wearing a suit, please feel free to be more comfortable. Here, we're among friends. First of all, I would really like to welcome all of you here, our esteemed speakers, but also our guests, and also recognize in the audience the Minister of Housing for Bahrain, as well as the Undersecretary for International Affairs at the Ministry of Foreign Affairs of the Kingdom of Bahrain. Thank you so much for being here. You know, this group brings a very unique expertise that we often do not see as much in the UN grounds. As Mr. Harris mentioned, we're starting to engage more and more with the private sector, but the relationship is still somewhat clunky, if I may. So it's really good for us and for IPI to be helping do that bridge of connecting these two sectors, the public and the private. And today's goal is really to see how we can contribute to these high-level dialogues that Mr. Harris pointed out in September. So hopefully what comes out of this discussion will feed into these high-level meetings that we'll have in September. There's really two basic questions that we want to ask them today. The first question is how financial institutions, including IFIs, are transforming within, meaning how they're integrating the 2030 agenda in their core business. And second question is how financial services are driving change externally. So how is the 2030 agenda a new regulator within and also outside? And third of all, what could be the impact if these major financial services institutions could align entirely with the goals and principles of the 2030 agenda? So what if it's no longer the green on top of the brown, but the other way around? So Before we start, one housekeeping item. Every speaker has been given 5 minutes. When 4 minutes are up, I'll raise this little globe. This means that you'll have 1 more minute. And then when the 5 minutes are up, the shark will come, which means that your time's up. This will ensure that we will have enough time for Q&A with the audience. So also, please prepare your questions and comments. And then the panelists will also can engage in a conversation among each other. So with that, our first speaker is Mahmoud from the World Bank. Sir, you have the floor.
Right. Good morning, and many thanks for inviting me to this event. I'd like to recognize, of course, His Excellency, the Honorable Minister of Housing of Bahrain and his delegation. And I'd like to follow up on what my good friend and colleague Elliott started with. So when we coined at the bank and with the MDBs, the multilateral development banks, the phrase that is becoming now controversial, as expected, billions to trillions, we're realizing that there is going to be a major gap in financing to be bridged by the private sector. And the main difference between the SDGs and the MDGs, that while MDGs thankfully brought NGOs to the picture, we assumed from the very beginning that in addition to governments and the NGOs, there is going to be a greater role beyond philanthropy, which is very important, beyond CSR, which could be useful in a particular context, but to put the finance and the business of achieving sustainability as part of the core business of the relevant corporations. It is not a kind of a side line project. It is not a PR function of a bank or a company that tries to say that they do what they can, but it's basically a good line of business. We're very happy with the initial reactions of the business community as reflected, for instance, by the report of the Business Commission for Sustainable Development, identifying more than $12 trillion a year of business opportunities globally, but more than half of that is coming from developing countries and emerging markets. This was almost 3 years ago. Where are we on that? Are we realizing this kind of potential of participation of the private sector or not? I would say not yet. The opportunities are there. There could be some good examples here and there. We see some interest in infrastructure projects, revival of PPPs, some good interest in renewable energy. There are some bits and pieces, but so far we cannot, I don't like to dispute the argument that we have an SDG consensus. We don't have one yet. Not in the frameworks, because we have sufficient summits, we have sufficient principles, we have good ideas, but when it comes to application at the country level and indeed at the local level, there is a lot to be desired. So what are we doing about that? You may have read what our good colleague and friend, the acting director of the IMF, today in the Financial Times, mentioning that the whole business, the whole capitalist system needs more than course correction. Then you see from different participants of the financial market, including from the investment banking side, that I think, for instance, when he issued that famous letter by now to his clients, urging the business community and the financial community to combine profit with purpose and to make capital just. All is good here, but how that is being translated in the field? Of course, there is a great deal of discrepancies across countries. There are some very good examples. I was yesterday in meetings with the government of Vietnam, the government of Colombia. Those are very bright examples of taking SDGs very seriously from the government level, putting it in an integrated framework and providing business opportunities. So what's happening elsewhere? In Africa, we wish to see more. So in Asia, in Latin America as well, there is a great deal of discrepancy, as I said. So from the World Bank Group side, we are trying to fix some things on our side first by being more friendly to the business sector, by stopping crowding out, by adopting the impact investment principles, by making the doing business approach more supportive to the sustainable development goals. Actually, the very capital increase of the bank that happened a few months ago is based on our ability to achieve the SDGs by more partnership with the private sector, by more engagement with women entrepreneurs to fight poverty, and by getting the shark closer, by doing more business in the fragile and post-conflict countries. Perhaps I may have another opportunity to give more examples. Thank you so much.
Great, thank you so much. These are just opening remarks, so it'll be great if we hear more examples in the Q&A. So next we have Amuna from Global SDG Philanthropist.
So the speakers and the panel will be discussing the magnitude of additional investments needed to successfully adopt the SDGs as the global framework and facilitate all giving from the private institutions. Sorry, can you guys hear me now? Is it better? From the private institutions, government, and private finance. But there's still going to be a 2.5 trillion gap with all of that being in full use. Globally, philanthropy has an estimated $1.5 trillion in assets, and they give about $150 billion in annually for causes aligned with the SDGs. However, the majority by a long shot of the world's philanthropic giving goes to education and health. $100 billion of the 150 basically is divided between those two. So for example, climate action gets 1.5 billion. The SDG goal, no poverty, which would seem to be really important, gets around 2 billion. So this is not the bold giving that we have been expecting, nor the one that we need to reach the 2030 KPIs. Very unfortunate, as philanthropy in all of its manifestations, from personal giving to foundations, is the most likely and natural resource after the government to advance the world on issues that don't have a quick or immediate return on investment and that can address systematic, difficult issues innovatively. If we can shift them from thinking of short-term projects into long-term and very long-term collaborations, as well as move them away from the trendy or sexy SDGs, as we call the education and health. Additionally, as we study how CSR and philanthropies are making some of these shifts, we're finding that it's very easy to articulate the things that you're already doing and put them in the SDG framework, which speaks to the differentiation between SDG funding and CSR funding. So when you do that, you look like you're doing your part. You look like you're really stepping up and creating the SDG benchmarks that your government is looking for. However, it is not okay, because although we're capturing SDG effects that have happened, we're not really jumping. We're not really playing a more active role, a more serious role in collective work to deliver on all the SDGs. So we don't want to just capture, which is important because some people don't report, but we want to also add. Otherwise, there will be, we will fail to make significant changes needed for 2030. Now, for philanthropies and CSR money to become more and more engaged, there are some issues that have to be addressed. First of all, figuring out how can we make the non-education, health, and employment or economic opportunity attractive so that we can address the loop-sided giving for the SDGs. How can we increase attention and dollars for them, both through media and through UN efforts? The second thing is that there's a lot of rich people, there's a lot of foundations. However, we are not really gaining, or we're gaining very little new philanthropists every year that are excited about giving, SDGs, or the 14 other SDGs that we need to think about. The third is that we need to treat them as partners rather than merely funders. I know they get invited to a lot of meetings, but we need to sit at the table. We also have to have more transparency. I'm already here? No way. Okay. We have to have more transparency because one of the core challenges that we have is that there's not enough data on where the dollars are flowing vis-a-vis the SDGs, or enough transparency about the real impact that those dollars are having. And unless we have that, philanthropists will not jump in.
Thank you. Thank you so much. I think that your statement made a really great point of connecting philanthropy and the private sector and how those two are global forces that can help achieve the 2030 agenda. And next, we turn to my colleague, Zubaida Bai, and you have been involved in the health sector. So I'm sure you also have some comments and ideas on what our colleague just mentioned. You have the floor.
Sure. Hello, everyone. It's such a privilege to be talking here. I think I bring two very interesting perspectives to the table. One is I have been an entrepreneur for a decade in global health. I've led the organization as an SDG pioneer, but I also now evaluate people who apply to be SDG pioneers. And it's very interesting to see the trend of the number of corporates that are coming in wanting to report based on SDGs. They are also very willing and wanting to bring more capital to the table. So from an entrepreneurship perspective, and now I move on to the investor perspective, where I am raising money for a fund that is investing in women entrepreneurs. So excuse me, but I'm going to be heavily focused on gender when I talk about financing. And I think the real reason is that as much money as we want to flow in, somehow gender has been sidelined in many ways. And I say that because while we took wings with the SDGs, we actually recreated the way we thought about MDGs, the failures, and we analyzed it. However, when we think about integrating gender into the SDGs, I think we're still trying to put wings onto the boat that has been centuries old, right? We're trying to add bells and whistles. We're trying to make it pink. We're probably trying to make it fly. It's never going to fly. We need to bring gender from a perspective to the fact that we're going to want gender to fly along with the SDGs. There's one interesting perspective from an entrepreneurship angle that I want to bring in. I was doing research for the amount of capital that flows into gender, very specifically SDGs, and I found out that even thinking of gender holistically is not happening with that. So for example, we take the number of how many women who are mothers are actually leading entrepreneurship, right? So if we look at the number, there are 2 billion mothers in the world. Of that, about 20 million of them are entrepreneurs, which is a ridiculous 1%, right? Of that, we have absolutely no numbers of women of color. We have no numbers of women who are in politics. And we kind of are missing the fact that we need to be having half the population of the world leading SDG conversations. We need to be having them to bring in the capital that is needed, both from an investor perspective and from an entrepreneur perspective. So we have this huge wave of gender lens investment that is coming in, trying to bring in and being aligned with SDG 5 and SDG 3, right? So when we look at numbers in terms of investment, we're looking at the government investing in education, right? And we're pushing huge amounts of capital into education. However, we have to understand that if you look at SDG 4 and think about equality in education, if we look at the numbers, we are looking at the government wanting to invest. The numbers say that per child, per annum, we're investing about $300 for education for a child in the developing world. If we look at it from a developed world, we are investing about $8,000 per child. How are we going to bridge that gap? How are we going to talk about an equitable world when you're investing in a child that is the future of tomorrow leading SDGs when the disparity is $200 to $8,000, right? And that is a much bigger conversation to have than just the billions to trillions, right? I feel like mobilizing the trillions is actually happening. There is a lot of money that is going in. In our own fund that we are setting up, we are looking at SDGs. We are looking at ESG principles to be integrated into the companies that we invest in. So our core is the company needs to be led by women, or the company needs to have the intention to let us come in and allow the organization to be gender neutral. we're also looking at what do we bring to the table in terms of private sector partnerships, because only then, when we bring private sector, when we bring that money, will we be able to bridge the huge gaps that are disparities between companies that are run by people, by women, but also achieving SDGs from that perspective.
Great, thank you. Excellent. So now we turn to Bruno. And thank you so much for bringing the gender perspective. I think it is very important that we highlight in this panel that aspect. So Mr. Bruno Bastit is a senior corporate governance and sustainable finance specialist at S&P Global Ratings, based in New York. Bruno, you have the floor.
Thank you, first of all, to Al-Baraka and the Kingdom of Bahrain permanent mission in New York in the UN, as well as the IPI for hosting us today. Very interesting remarks so far, and I think I can relate to quite a few of those in what I've done so far in my life. But as far as S&P is concerned, so we are a credit rating agency. So we opine on the capacity of government, companies, or cities to repay the debt. And what we've been doing over the last few years is assessing how environmental, social, and governance issues impact the capacity to repay debt. What we found over the last couple of years is that in over 10% of the cases, either an environmental factor or a social factor is affecting companies to just do that. So what's happened since we found that out? Well, as a rating agency, we do have quite a lot of impact in what we do. So we try to train every single one of our members, every single one of our credit analysts, to make sure they understand really what ESG is about. That's one. The second aspect of it is helping issuers with loans or bonds that are linked with green products, so green bonds. As such, we would analyze how this bond helps, what the use of proceeds are used for, whether those bonds are actually green. And I think there's one of the big challenges as well that's also faced by the Islamic finance world is how do you ensure that the product that are ESG compliant or Sharia compliant actually achieve the objectives that you set them to be, right? And as such, I think what we've been hearing so far, the call for more transparency, for more disclosure as to what the objectives are, but also how do you measure success. And one thing I got to think about quite a lot is how things have changed since I got to that space about 10 years ago and how things are now. Even the last couple of years in the US. 2 years ago, most investors in the US had no idea what ESG was or what climate change was real or not, for instance. And now people are starting to get to grips with it. There's more development and more sophistication, I guess, with UK or European-based investors, even Asian-based investors. But we see some good signs, some positive signs, and I think that's something to be applauded. One other positive thing is that people are calling investors to account and are asking to see some results. So a bit more than just a lovely policy and a lovely annual report with a couple of trees and a couple of flowers and saying we save the world, and equally the same thing for corporates. So I think now people are looking for actual measurable results, actual measurable impact to be able to judge whether or not things are going the right direction and whether indeed investors and corporates are doing their best to address the SDGs. Thank you.
Great. Thank you so much, Bruno. And thank you for highlighting how the business sector is changing its mindset in terms of sustainability and climate and how they are more cognizant about it. And may I add, despite the political situation in this country, it's really good to hear that business is progressively taking on these agendas. So thank you so much. Next, we turn to Dr. Ali Adnan Ibrahim. He is the Global Head of Sustainability and Social Responsibility at the Baraka Banking Group in Bahrain, the world's largest Islamic banking network. Ali, Amin mentioned in his statement that Al-Baraka is has one of the most innovative ways of investing in the SDGs. So we look forward to hearing you.
Thank you so very much. Excellencies from the Bahrain delegation, Excellency, the UN representative in Bahrain, Mr. Amin Sharkawi, and IPI, thank you so much for hosting us. And ladies and gentlemen, thank you so much for joining us this morning. It's really a pleasure to have a very candid discussion on the perspective that my illustrious colleagues in the panel have shared, the gender and the global funding gap, and what the businesses can do. And I think these are just the starting points, and I think it's just the start of the sustainable banking and finance journey that we are witnessing. And of course, there are so many things that need to be integrated, but at the same time, there are so many positive indicators that suggest that we are probably on the right track for the first time in the history. On bridging so many gaps of inequality and disparities socially and environmentally. And I think being a Bahraini bank, we are very proud to be part of that journey and integrating some of those considerations in our business. I would love to share some of the insights that we have learned in the process. But I think it's very important to look at the things in some perspective. We all know that the SDG funding gap is about $3 trillion now, and it's growing because the more we try to discover what SDGs to integrate, the more we realize that the more needs to be done. So $3 trillion is a very small ballpark. It is a starting ballpark. It's going to increase more. But I don't think there is this is to discourage us from exploring more. What we see is generally, if you look at the global household wealth, that is $317 trillion already available in the system. And if you look at the global banking assets, it is $124 trillion already in the system. And if you look at the asset under management industry, the asset management industry, it is already $79 trillion. So there is enough money in the system, but somehow we need to bridge that gap. That is the magic recipe to make that money flow into the sectors where it is needed the most. And from that perspective, I think the banks and the financial services sector, they have genuine issues. They not only have to report to the shareholders, but they also have to comply with the regulators. And the regulators, there are certain red lines that the banking industry and the financial services industry just cannot cross. And there is no reason to cross that. And what we have seen in our experience, that once in 2015, when the SDGs were announced, we immediately thought, what is it that we can do? So we immediately developed our strategy on Al-Baraka goals, we call them, that was creating jobs, supporting healthcare, and supporting education, and supporting clean energy. And Your Excellency, Mr. Amin Sharkawi, has been with us on that journey with us. And then we went to all our subsidiaries and we asked them, how is it that you can develop the 5-year roadmap to develop the funding strategy, how many projects you are going to do that. And based on the feedback, it took us 6 months to get the feedback from our subsidiaries, and they all gave us their targets. And now annual targets that they gave us 3 years ago, we are asking them how much you have done, and they are exceeding in most of the indicators that they had given us. So and I think we are a smaller bank in the global scheme of things, $25 billion under management. But at the same time, I think what we have learned is that the portfolio alignment is something very important, very easy to do. At the same time, it has to be a gradual bottom-up process, and there has to be a buy-in from all the teams and subsidiaries to make it happen. Because at the same time, there would be things which would need the realignment with the existing business model. So I think there has to be the board has to be involved, the board chairman has to be involved, the top management has to be involved. Without that, this journey is not likely to happen. I think now the critical mass is reaching, and at the same time we see a lot of positive outcomes which are happening. And I think, and the most important thing that, I was speaking to your colleague in London last week, and the internal KPIs are very important. And the KPIs provide the management with a clear direction that this is not just something which is good to do, but is actually your progress and your performance is going to be monitored based on that. Thank you so much.
Great. Thank you so much for this. This is very good to know. You've addressed the issue of the gap and how the funding gap and how we can start doing that. And you already made a recommendation that the top needs to be involved, as well as the bottom up in terms of the targets of the shareholders. So thank you so much. Amit Puri is the Global Head of Environmental and Social Risk Management. Amit, you have the floor.
Thank you. Good morning, everyone. It's a little bit tricky to talk into the mic and look at you, so apologies, because I don't think it moves. So I'm not ignoring you. Oh, it might move? Ah, there we go. Okay, well, we'll see if I can make this work. I'm the Global Head of Environmental and Social Risk Management at Standard Chartered. And for those of you that don't know Standard Chartered, we are a UK headquartered bank, but we make over 90% of our revenue and profits from Asia, Africa, and Middle East. Our footprint is emerging markets, and we've been present in these markets for over 150 years, Bahrain in particular as well for a number of years. What is our philosophy on financing the SDGs, and what is it that we are being told to speak a bit closer, and what is it that we are trying to do? So we believe that financing the SDGs is inherent in our strategy, but essentially we believe we're doing it where it matters most. Our footprint is not financing wind farms in the Netherlands or in Sweden, and they have populations that obviously want clean renewable energy, but we feel it's more impactful to meet the SDGs if we do this in places like Botswana, Bangladesh, Taiwan, etc. And so these are our footprint markets. This is what we've called home for a number of years, and that is essentially where we are putting our financing and capital towards for investment. We appreciate all the figures that people have said today about the 2.5 trillion gap. It's hard to pinpoint what exactly we're financing. In fact, I was talking to Rebecca just shortly about how we create a P&L and balance sheet so we can say what impact are we actually having. And that comes down to a number of factors. There's not necessarily clear taxonomies on what is meant by sustainability. These are all developing. The EU's obviously published something recently. The Chinese have their own one. And so we're sort of navigating as a private institution, how do we ensure that when we say we're doing something as sustainable, we're actually making sure that it is sustainable. We've recently launched some new products which we believe are not necessarily a world first, but are having an impact in emerging markets. The first one, in order to deliver the SDGs, was a sustainable deposit product. This is where corporate clients can essentially place money with us, and they can be sure that money is going towards sustainable projects or assets in emerging markets. And we also very recently issued our first sustainability bond. We thought very carefully about whether we should issue a green bond or a transition bond, as other people have issued recently, but we've very much focused on a sustainability bond, all with the intention of helping to achieve the SDGs as quickly as we can and playing our part in them. The opening speaker made some comments about environmental and social risk management, and that is essentially my job title. So why am I here talking to you about financing the SDGs? And I guess to prove a point about how well integrated this is into Standard Chartered, we've combined our risk management, which was my team, and our opportunities team, and one of my colleagues is in the audience, where essentially our bankers and our risk people are sitting together to say we aren't going to achieve this by sitting in silos within the organization, let alone outside of the organization. And so we've brought these teams together where when we're financing opportunities, we're making sure that we're having the highest standards of environmental and social risk being managed, as well as looking for these opportunities. We participate in a number of forums. We've worked with the World Bank on a number of initiatives. We helped issue the world's first blue bond last year for the government of Seychelles. This was a small amount, but again, it just proves that there was a lot of innovation taking place in this particular field. I don't necessarily have much more to say, to be honest. I actually talk quite quickly, and I'm trying to give you back some more time, Jimena. So
this is great, and you don't have to use all the time. I think you said a lot in the time that was allotted to you. So thank you so much, and thank you for pinpointing at these really innovative ways of thinking, and also for bringing the point that the SDGs should not be just a branding, but you actually are thinking how these projects can be sustainable and do that shift very consciously and mindfully. So last but not least, Ms. Rebecca Self, she's the Chief Financial Officer of Sustainable Finance at HSBC Holdings. Rebecca, you have the floor.
Good morning, and thank you for the opportunity to speak today. I'm going to talk about 3 different areas. And one, well, just as an introduction, one of the things I'm frequently asked is what my job title really means. And typically, it means putting numbers on things which are usually quite tricky. And that includes the SDGs. It includes the balance sheet, the P&L for sustainability, which we mentioned earlier. So today, 3 things. First, we have looked at a practical guide and been involved in formulating a practical guide with UN Global Compact and Global Reporting Initiative. That was us and 40 different multinationals. And that includes looking top down at a business, and it can be applied to any sector, and completing a principled prioritization of the SDGs which are relevant for your company. And the first piece is to align to your existing sustainability strategy, if you have one, but then to go further and look at quantitative information to measure both the positive and, importantly, the negative aspects where you may contribute to the SDGs. So that's number 1. Second, HSBC has issued 2 SDG bonds. One was in Islamic format from HSBC Malaysia. And here, as a bank, we're really a derivative of our customers. So these bonds, the use of proceeds is for projects related to the SDGs, and that includes both the goal, but also the indicator level. There are challenges with that approach. So a couple of the SDGs are health and education. There's also gender that we've been looking at as well, one of our clients. But then you have to try and measure the impact. And quite frequently, when we talk to our customers in some of these sectors, they may not know the impact necessarily. So to give an example with clean water and sanitation, we were using the use of proceeds with a customer who were based in India. They were building toilets, other infrastructure, and we're trying to get statistics and measurement about how frequently these facilities were being used. It was really challenging. And there are estimates and assumptions. So I just sort of warn you, once you start getting into it, there's lots of these topics and challenges which come up. But that shouldn't be a barrier to progress. And then the last point I wanted to make, and third point, I'm the chair of the European Banking Federation Sustainable Finance Group on the SDGs. That's made up of 120 European banks. And we've started to look at how we're integrating the SDGs ourselves and collating that into a report which will be published next year. And it's becoming quite clear, not all of the SDGs, and particularly not all of the indicators, are necessarily relevant for banks. And depending on our business models, our geographies, some or others might be more relevant for us. So I think that's something just to keep in mind as well. The other piece related to that is the trade-offs and overlaps and interlinkages within the SDGs and this short-termism point, because it can be that actually we're saying no to short-term revenue in order to achieve some of these longer-term sustainability goals. So there are these interlinkages and trade-offs to be aware of. And just to finish off, I'll say there has been progress, and some of those are examples, but there's a lot more to do.
Excellent. And I think that's a really excellent way to segue to the next phase, which is the Q&A. There's a lot more to do. How do we do it, and how do we accelerate it? Because now it's 2019, so 2030 no longer seems like a very long way to go, actually. It's a short time. It's a short-term period. So my colleagues are going to be with a mic. Just raise your hands. Make sure to introduce yourself. Keep your remarks brief. I will also use my toys here to monitor time on your side. So please, questions? Over there.
Hello. Thank you very much for such an enriching panel and conversation. My name is Mari Matsumoto, and I'm with the Multi-Partner Trust Fund Office, which is housed in UNDP, and we work on pooled funding instruments. I heard a number of things that are very, very interesting, and I guess my question is targeted at many of you. It's kind of hard to identify which ones. So Mr. Harris started the discussion saying that it's important to have some kind of mechanism to bundle up bankable projects. And I was wondering how the panel felt that pooled funding instruments, where we actually are putting together bundles of projects to be funded, working together on specific results, how that could be used as an instrument to fund programs and projects on the SDGs, because they also include indicators on achievement on specific areas of results. My second question, which is kind of a broad question, is about how do you all see the specific role of the UN system in areas such as de-risking, making the environment amenable for private financing, and all of these types of identifying projects, helping with measurements? What would you see are the key areas that the UN system can play in helping to accelerate the SDGs? Thank you.
Thank you. Thank you. Thank you very much for those questions. Anyone else? Yeah, here. I see. Let's take a few.
Yeah. Thank you. My name's Laird Hindle. I'm from Global Affairs Canada. First, I'd like to thank Bahrain and IPI for organizing today's discussion, because it's extremely important. And I think this year, this cycle of the HLPF, we haven't had as much of the financing discussion and the work and the coherence between governments, private capital, the UN system, the World Bank, for example. It's very important. It's been on the margins, but not as front and center as it should be. But this is the type of discussion that we want to see continue this fall at the high-level dialogue on financing development that Ambassador Blanchard and his colleague, the ambassador from Ghana, are organizing with many to celebrate progress on ADIS, but also tackle those challenges and best practices, not just from government, but also from financial institutions, both public and private. But my question for you, because I am from Capital and not based here, so it's a bit outside the UN system, is as we're looking to really push forward that public-private partnership, the partnership between governments and financial institutions, where do you think are sort of those key levers that we haven't really been pursuing? Mr. Harris spoke to guarantees and blended finance, but are there things, especially from the financial sector, that you still aren't hearing from us or wanting to see from us? Thank you.
Great. We'll take one more and then we'll go back to the panel. The lady. Yeah.
Hi, Cornelia Walter. I've been for the past 20 years with UNICEF in various humanitarian crisis situations. The POSE movement that started in Haiti 2 years ago is based on the understanding that human existence is the result of 4 layers: aspirations, emotions, thoughts, and sensations, and that sustainable development must cover those 4 levels: the soul, the heart, the mind, and the body. So coming back to what Ms. AbuSulayman stated, donors and financial institutions have a tendency to go for the tangible assets and for the sexy topics, so health, education. And I'm wondering where you see the perspectives of less tangible elements, but which are just as crucial, if not more, which means empowerment, which you can't see, which you can't touch, which you can't count, but which in the end is the final objective that we want to have reached by 2030. Thank you.
Great. These are a great set of questions. We were, so just to, if I may try to remind the question. So basically, what are the bankable projects and pool funding out there and how to make them work? What's the role of the UN system in de-risking? Canada asked about the triple Ps and the key levers. What are the key levers? And finally, UNICEF asked about the perhaps invisible or less tangible aspects that are also key to achieving the 2030 agenda. So let's start with you, World Bank.
Right. I think the question from Canada is spot on. When it comes to coordination, we have a lot to work for here. After many years, I think the different tracks are not speaking to each other. We have Finance for Development Week a few weeks back. We did many discussions about that. Now we talk about implementation, and very few VNRs submitted by governments are providing any kind of costing or any kind of suggestion of budget, any kind of signaling to the private sector. So to the point of the project preparations, you cannot really do that unless the budget is designed right and providing the right signals, and you make sure that the budget of the state is not crowding out the private sector and providing a kind of a conducive incentive structure for that. So I think it's about time after 4 years for all of these tracks, the data track, the finance track, the implementation track, and most recently the STI, Science, Technology, and Innovation track, to speak to each other, because development is about this kind of integrated approach. Then you talk about PPPs. There are many good work on that. Best manual for PPP we saw was from South Africa, for instance. But it's not just about the manuals and the projects. It's basically about the approach. So perhaps a reference to the good G20 work under what's called the Hamburg Principles could be very much helpful. Couple of quick points, and then I stop. SDGs finance is not about transactions. We can brag, for instance, from our side about the $4 billion that we put in frontier markets. We can say something about our $70 billion a year of funding different projects in human capital, in sustainable development. That we were the first institution. There is a competition between us and a couple of other MDBs on who issued the first social bond and who issued the first green bond. But definitely we're the first in SDG-linked bonds. But it's not about transactions. It's basically about sustainability. And a very simple message here. And just to know the difference on CSR as a kind of PR, if it is like that, please stop it, because we don't need any more of that. And it's about time to get sustainability integrated. And I give you a very quick example. If the firm in question or the bank in question is charging a poor migrant more than 7% for transacting $200 to their family, which is basically for education and health, you cannot really go and brag about beautifying or decorating a school somewhere. If your bank is involved in illicit capital flows one way or another, you cannot go and just tell us that you are doing good by greening one square in one capital. If a financial institution is not involved in a sustainable way by preventing any kind of funding to single-use plastic, you don't come and tell us that you care about the environment and all of that. The integrated model for sustainability needs to go back to the basic principles of impact. And there is a great deal of impact washing around. That's why the financial community, the MDBs, agreed on 9 principles of impact investing to make sure that we are respecting the ESG, environment, social, and governance impact. And when somebody's checking what is really happening in the field, they really would understand what is really happening. And we need really to do that kind of quickly. We're running out of time. 2030 for those who are involved in development finance is very much short term. Talk about, for instance, some energy project that would take 4 or 5 years. So it's very much an issue of being timely about matters and taken the lessons of the last 4 years, and the call for action by the SG in the presence of the leaders is very much warranted, but that needs to be answered to at the very local level. Thank you.
Thank you so much. So stop if you're doing CSR work and move towards sustainability.
If it is about PR.
If it is about PR,
Yeah.
and then the SDGs are not about transactions. It's not a transactional
It's about
aspect.
policy, governance, and approach of doing business.
Excellent. Thank you very much.
I have two things that I want to say. First of all, if you can't see it, if you can't touch it, then you're not going to fund it. That's unfortunately the way of the world. You have to have impact. You have to have measurables. It's very important. The other thing is we did. Let me just bring this a little bit. We did a study in my company, 3 Sustainability, about CSR in the Middle East. 70% of companies, medium and large size, said they're aware of the SDGs. Only 12% have a team member or a team working on the SDGs. 12%. Out of the 12%, only 33% do any meaningful reporting, which means non-PR, right? So unfortunately, we still have a lot of PR, and this is not just in the MENA region, this is across the board that we're seeing it. The other thing that I wanted to talk about is that even banks, we're not talking about banks where we're doing great CSR and that we might help them report it so that we capture the SDGs. I'm not even talking about the idea of aligning the core principles of ethical leadership and financial institutions into making sure that we treat everybody fairly in such a manner. Banks that I've worked with don't care about the SDGs. In Europe, there is a big change, and we've noticed it, and they're leading the way into thinking about it in relevant indicators, mostly, a little bit internationally, but in the banks in the Middle East, and we've worked with from Morocco all the way to Iraq, their number one priority is to make money for their stakeholders. And if you cannot show significant gain for them, they're not going to go into an SDG. This is where the United Nations needs to do concentrated push into outreach, making sure that the gains, the financial gains they're looking for, can be translated into the SDG, whether through bonds, whether through projects, whether through CSR, because also their CSR usually has to have a financial aspect. Anyways, unfortunately, I don't think we're going to reach 2030 SDG goals if a sense of urgency is not conveyed to the major financial institutions around the world.
Thank you. Thank you very much. Rebecca?
Yeah, thank you. And a few comments. Firstly, I do agree. I think with this topic, it's really important to have your own house in order with policies, with structures, before talking about some of the transactions and also CSRP. So certainly agree on that. And then just to talk a bit about the transactions and some of the barriers and where the UN may be able to help and some of the other groups. So firstly, with loans and investments for us, they have to tick returns, so be financially viable, but then they also have to tick the sustainability flag in this area. So there's effectively 2 areas that we're trying to tick. And if they're scalable or large, it helps. So I recognize the challenge about some of these projects being smaller, and if there are instruments or ways to bundle some of those together, it's really helpful from a bank point of view. And then also just to mention something I'd underestimated when we started this journey, and that's the amount of training and awareness and education, and that's for ourselves. So this can't just be about one person in a bank or one team in a bank that do this. So we've gone through quite an extensive process training our relationship managers. That's not going to stop. It's really just begun, and I completely underestimated how much we were going to have to do and continue to do about the SDGs and about sustainability. But equally, that also applies to some of the projects that we're being presented. Presenting business cases, looking at financial data. It would be really helpful if there were collaborations or ways we could get together with some of those people and groups presenting proposals to talk about what a bank expects to see in order for a project to be viable. And just lastly, one area that we do see is there's lots of terms and conditions attached to some of these investments and loans which are proposed. And that doesn't always help either. So I think there's a real opportunity to get together to talk about some of these issues, and it may be more of a communications gap than anything else. But by talking, hopefully we can bridge some of those issues and find some solutions.
Great, thank you so much, Rebecca. Ali?
Thank you so much, and fully agree with what Dr. Mahmoud said about the PR spin part of the sustainability. I think that's really unfortunate if wherever that happens. And I think SDGs have really changed the game. The corporate communications department that had the budget for the PR, I think now, which was very haphazard in most places, most companies, they would do things. But I think the structured approach of sustainable finance and sustainable banking through the SDGs lens, I think that is transforming a lot of companies, a lot of banks, and I think my colleagues here from the banks, they are doing an incredible job. First SDG bond in Sukuk, and also the blue bond, and also the SDG related Sukuk and bond. It's amazing examples, and trickling down to the very transactions. And I think HSBC is also looking at how to integrate gender into business, and also the blue bonds, and I think these are all the very encouraging stories coming from the banking sector. But responding to the question from Canada, how do we look at the key levers? And I think key levers are importantly the structural adjustments. We talk a lot about blended finance, but the practical part of blended finance is still far from being developed. And how do we make the ODA and the multilateral aid support and catalyze the private funding? And I think that is still not fully developed. And I think that is something that needs more preparation, more work, more brainstorming, more partnerships. And I think we have started as the industry and also with the MDBs. The dialogue is very encouraging. It's progressing. We started from the cross subsidy that didn't really go very well, and I think now it is blended finance really provides the framework where the future is, but I think we need to get there. And I think the pipeline question was also very important, because if you look at the communique from the G20 governments for the last 4 years, consistently this point is there, that there is no pipeline available which is investment ready. And I think making investment ready pipeline comes down to the budgeting, comes down to the very KPIs of the financial institutions, comes down to the very training of the branch managers and the relationship managers. And I think there is a lot that needs to be done. And I think I'm very happy to share that when we signed up with UNDP and UNEP, the idea was that to empower and do the capacity building of our local branch staff. How, if they are evaluating a project, what is it that they can integrate more? What environmental considerations, what social considerations that they can add, which do not really cost much, or maybe do not cost at all, but at the same time they add a longer time value into the projects, which usually the branch staff is not really trained to. Thank you.
Great, thank you so much.
Sure. So I think I want to answer the question of how the UN can support, but starting off with the banking sector, I think I've always looked at banks from childhood as this organization having so much money, taking money from people who have it and then giving money to people who want to make more money out of it. So it's basically the leverage creating impact on both sides, right? And that being said, I think as Ali was mentioning, that there are some red lines the banks cannot cross, and that's probably the first level where UN can intervene, is by creating global financing policies that pretty much every bank can go ahead and follow, but also the private sector players like us who are investing in organizations with a gender lens and with an SDG focus can follow, thereby being able to collaborate with the banks who basically are the conduit for money in this workspace. I think the second thing that the UN can do is basically around creating this ecosystem of change. Right, I think most of us in the private sector are guilty of, including the banks, are guilty of wanting to create the profit for our stakeholders, and that is definitely yes. But we are in a position to create that long-term change as well, and I think the UN is at a position to kind of bring that long-term thinking as a mandate into many of these organizations for them to be able to create better policies and infrastructure. And I think the last thing that the UN can help with is the transparency, right? I think we've been carrying this burden from the MDG times, basically that we have pretty much we have about 75 countries, and hardly about 20% of those countries are able to report in a very transparent manner, thereby allowing us to track SDGs and the progress. So if we cannot bring most of these governments to talk about their budgets, their impact, their work, their allocation of capital, without shaming them in a way that, you only allocate $50 per child, per student, so, we don't know what you're going to do and how you're going to reach there. So making the system more inclusive for all countries to report in a way that we can bring transparency and thereby be able to bring in the capital that is needed to achieve the SDG. So I think those three things. And to answer the question that lady had about the soft aspects of investment, right, which are not measurable, as Mona was saying, it's very hard to invest in things that are not something you can touch and feel and you cannot see the impact. However, from the recent G20 onwards, I think there has been a lot of talk around social determinants of health, right? Like you cannot achieve healthcare goals without concentrating on social determinants of health, which is everything from food, nutrition, education, gender, racism, right? If you cannot address those issues, you cannot address healthcare. And if you cannot address healthcare, you cannot address financing. So I think there is a lot of talk around the social determinants of health now, to make it more tangible by integrating them into more tangible things. I don't think we can measure them as such, but by integrating them or pairing them with things that are measurable, that are things that you can touch and feel, that are things that you can look at in a tangible outcome perspective, I think that's definitely happening, at least in the last year or so.
Can I just add one thing? So when Zubaida talked about how to make something measurable. So, for example, meditation in schools is being now funded by several foundations. And the reason is that they were able to measure that when you do meditation, student aggression goes down, their health issues, the number of days that they attend schools goes up. And so when you give us measurables, we can actually fund, especially at scale. We're not talking about a small, project somewhere. We're talking about big projects that foundations would go into. There's always a foundation that could measure something that is not able to be measured, but they're very few.
Thank you very much. Amit and Bruno?
Sure. So just making some points from a bank perspective, because I think there's been a lot of comments about the financial industry. I think to the points about culture and how it needs to be integrated into the organization is absolutely key. And like my colleagues at Standard Chartered, we're seeing a marked change in how the knowledge of SDGs and the impact that the SDGs have is already taking place within our bank. But I think what's more interesting from the panels and the other associations I sit on from the banking sector more generally, there is a huge awareness in the European bank space. So I'll just your point about the Middle East for a second. From the European banking sector, there is a huge awareness that there is a lot of effort that they can put in to achieve the SDGs. There are certain regional banks or certain regions of the world where we don't see as much awareness, and we see our role is to try and help those banks, and we work with HSBC on a number of initiatives as well. bringing it down to individual projects for a minute, one of the ways that we do that is through a risk management framework called the Equator Principles, which some of you may be familiar with, so that when we finance projects, we are ensuring that they're meeting environmental and social purposes. Now, they don't specifically refer to the SDGs, but they also ensure that we minimize the level of harm that we have. And you can see that there is a direct link between doing no harm and actually doing some more good as well. But there is a difference between the various financial institutions' maturity levels towards the SDGs, and to the points that were made around the time we have left, we don't have much time, and we appreciate that, to get as many financial institutions up the curve so that they don't start realizing how important the SDGs are in 2025. We want them to be knowing that today, tomorrow, next year at the latest, and we're committed to playing our part in doing that.
Great, thank you so much. Bruno?
Oh, thank you. So a couple of points on the first question about pulling projects together for investment. I think it's a very good point, particularly when you look at emerging markets where a lot of investors wouldn't go in there because of the risk on an individual basis, or as you say, for the lack of size. So you have a very good initiative that's currently happening called the CIG, the Closing the Investment Gap Initiative, which brings together banks, investors, projects in emerging markets, as well as the UN and some of the UN bodies to address this. That would direct you to this. That's one initiative that we've been very supporting of, and the idea is to do to achieve the pooling of those projects to make it investable by investors. So that's one. But that also leads me to a second point, which is the last of the SDGs on building partnerships, and I think for me that's very much the core one here. Let's not ask banks to do things they're not good at. Let's not ask NGOs to become banks and vice versa. I think the core thing is to leverage what people are doing well. So that could be in terms of measuring the right KPIs. Well, I don't expect a rating agency or an investor to know how to measure the success of a gender-based project or an education project. What I do expect, though, is a locally based NGO that will know how to do that. A local expert that'll be able to advise an investor or a bank on what are the right KPIs, how do you measure success, is he working, is he not working. So for this, I would call everyone very much to try to collaborate with as many people as you can, admit what you know and what you don't know from your standpoint. I know in the financial sector, we tend to have a slight tendency to never admit that and to never admit that there's areas that we'd like to get some more help on. But I think there's a moment for people to admit what they don't know and to reach out to people on this. On the second question that we heard about the levers that were not quite pulling, and I think there's this one which is concerning just about everybody in this room and really just about everybody even outside of this building, is asking for change directly. So you're a customer at a bank, well, ask to invest on an ESG fund, for instance. Does your bank have one? Is it providing that service? Does your bank has an SDG focus fund, for instance, for you to use? Or as a customer of a company, what is the companies that you buy your products from are doing with regards to SDGs? So I think the customer base angle is one lever that does work. We just saw this, what one single girl from Sweden can do in terms of getting people together and to react to things. So getting customers to react and to be more active is one element. As banks and financial services also do respond to their customer too in terms of product offering. So I would very much focus on that. Thank you.
Thank you, Bruno. Mr. Undersecretary, you have the floor. A microphone is coming your way. Yeah. And then we'll take a final round of questions and we'll come back for any final remarks.
Thank you very much. During the implementation phase of the MDGs, it was the public sector, with the support of a number of UN agencies, along with the private sector and the financial institutions, all contributed in the implementation or attempting to implement the MDGs. With the SDGs, it's very encouraging to see there's more and more encouragement by the private sector and the financial institutions to contribute to the implementation. of the SDGs. But let's face reality. Banks and financial institutions are revenue-generating institutions. Why will the banks and the financial institutions invest in implementing the SDGs? I agree with what Mr. Mohieldin mentioned. Yes, it could be part of the CSR or part of a PR polishing exercise, but that's not enough. We're proud to see the work of Baraka Group as a pioneer in the Islamic banking sector that is contributing concretely to the implementation of the SDGs. The statistics that Ms. Muna has mentioned are very eye-opening. Only 33% are being involved in the implementation, and only 12%, I got that the other way around. It's 12% who are contributing and 33% who actually report on the implementation of the SDGs. If there is no viable and a potential investment opportunity for the banking sector, they will not invest. And it is the public sector who devises and draws the policies that would address most of the SDGs. When we talk about zero hunger, or gender equality, or education, or health, all of these goals are being drawn by the public sector. Should the public sector decide to partner up with the private sector or the other way around, what's in it for the investment houses, the banking sector, the financial institutions? And excuse me for this, but all what the banks will say is, what's the return on my investment? For the public sector, it is achieving and implementing the Sustainable Development Goals. So I believe that without a public and private partnership, many of the goals would be almost impossible to achieve, because it is the public sector, it is the government, and especially if we all agree that the Sustainable Development Agenda is targeted primarily to countries of the South, and we all know that in these countries, it is the public sector, it is the government who sets the priorities, but lack the financing. So I'm curious to know and to learn from all of you as leaders in your respective banks and financial institutions, what successful models have you seen in the world? I know Mohieldin mentioned that South Africa has a very shining example of PPP, but how can we encourage the partnership between the public sector and the private sector, especially, as Bruno mentioned again, it's not about giving, it's how to have the private sector and philanthropists as partners in implementation. You did not raise your shark for me.
I forgot about time. I was so, listening. Thank you. I think that, I have no way to sum up what you said. It's very much why we hosted the event, to ask these important questions. There are two more questions, and then I'm sorry, but we'll have to wrap up. So the lady in blue and the lady in black.
Thank you. I'm Ombretta from UN Habitat, and I work on land governance, mostly in conflict-affected countries. So my first question is, one of the key aspects we've been working on is try to finance reconstruction in conflict-affected countries. And we held an event on exactly the role of private sector and financing institution to help us to do so. Because the programs we have set up for these are not really going as well as we expected. And basically what we heard is that there's no need for there is no way the private sector will come in context where there is no transparency, good governance, and rule of law. So basically forget about bringing in significantly financing institution, and particularly private sector, in context like Libya, Iraq, Iraq a little bit, but Syria, Yemen, etc. So this is my first question, if there is any way maybe to do so. And then just one link to also the previous speakers. I mean, obviously the weakness of governments is contributing to the difficulty in achieving the SDGs, particularly for local governments, which are weak in terms of capacity, but also finances. So even if the financing institution and private sector will not substitute their role, is there a way for these two stakeholders to actually support the local government in set up their structures and their systems to actually be better able to address the SDGs themselves? Thank you.
Great. And one final.
Thank you, Jimena. So thank you to the panelists. My name is Hadia Shirazi, and I'm a graduate student at Columbia University, where I study sustainability management. And I've also been a youth delegate at the UN and the World Bank Youth Forums. I've worked in the private sector, and I've worked in more non-profits than I can count. So as a young person, as one of the young, 2 billion young people in the world, the one thing I will say to the banking sector especially is that the stakeholders are going to change generationally very soon. And it's going to become a very common question, or perhaps the first question that we'll ask is like, where is my money being invested? So that'll make it a lot easier for you to give money to long-term sustainability projects. The second is also an observation. It has been almost impossible sometimes to get gender disaggregated data when I'm looking at disaster risk reduction policies, looking for infrastructure-related issues. It doesn't matter what country I'm looking at. It's almost amazing how it's not the norm. But I find it strange because when I walk into a bank, there's certain things I absolutely have to have in order to withdraw cash. We have standardization across international, it doesn't matter what country you're operating in, whether it's Islamic banking or not, to open a bank account, to have a proper profit and loss statement, to trade, whether it's S&P, there are things you have to provide because it's the norm. So I would say that might be something to think about in collaboration with the World Bank and the UN, is that if you don't provide gender disaggregated data, then you're not getting the funding. And it might be, it might be like a shock initially, but then it'll become the norm. And the final thing I would want to just say about the gender piece is I'd be remiss if I didn't bring it up. I still think that one of the reasons we're not really thinking about financing it is that women are still not in those rooms. They're really not. And I've looked at national committees, executive committees, you name it, and I've looked at it. If you're 12%, 18% women, the question is not coming up. And if it's coming up, it's usually a woman that's bringing it up. So in order to change that, we're going to have to really be frank again and say 50-50, it has to be. You've got to have some quota systems till it becomes the norm. So thank you very much.
Great. Great set of questions. We have to end at 10, so the panel has the challenge of facing the shark every 2 minutes. So we'll start here, and then we go.
Sure, I'll be very quick. So a couple of points on private-public partnerships and crowding in private capital for certain projects. We do this. Yeah. We already do this, and we partner with the UK's CDC, which is a development finance institution of the UK. And they actually, bluntly, and this is very public, they provide concessional capital for projects that we wouldn't be able to go into ourselves. So, to the point that was made about mobilizing the two together, absolutely, to the extent that governments want to meet certain SDGs, we are very happy to work with those governments and those financial institutions that we can crowd in that public capital to meet certain of our requirements, because there are different hurdles from the UK government than from our own internal sort of risk and return perspective. So I'm very happy to continue to do that. There was a point about sanctioned countries and conflict-area areas. I think it's not my domain, but I think the point there is that the regulators actually set out stringent rules on what we as banks can and can't do. And in particular, if you're a US dollar-based organization, there are very strict rules around that. So, I'm not going to say much more, but I don't think it's incumbent on the banks to necessarily be able to change that. On the gender data piece and the point that was just made, we are, and I think other banks also are increasingly trying to collect the data, disaggregate it, collate it, but also just understand what impact we're having from a gender piece. In fact, my colleague who's sitting in the room just behind you, and you might want to have a chat with her about this, that has been her focus for at least the last 6 months, to try and implement a system where we can get this kind of data out and then see what impact we're having. So I think all the points that you raised are extremely valid. we are working on them, and I know it's not just Standard Chartered. I can pretty sure HSBC and other international banks are as well. It just takes a bit of time. But to my earlier point, we don't have that much time, and we appreciate that.
Thank you, Bruno.
Oops. So again, for the question on PPI, I think it's still a very, very crucial element. And again, to my earlier point about partnerships, so getting people to do what they do best and do it together, I think that's quite key. So reaching out to various people, and also that's a good way to also de-risk potentially the investing in some of the projects. That's one. And another one on the gender issue, I would again keep doing exactly what you're doing and keep asking questions and asking for it. In terms of gender equality, it took most of European countries to actually get a law in place to ask for quotas. Until this was achieved, nothing was happening. So maybe there's one way forward. But again, if no one asks the questions, no one's going to get the answers. So the more questions being asked and the more you push for this, I think the better overall. Thank you.
Great. Mona?
I think the idea of the public sector setting the agenda and expecting the private sector to pay for it is a very valid point. But at the same time, this is sort of like the long-term investment versus short-term investment. So for example, if we have more stability in countries, we'll have less immigration, less tensions, less war, less conflict. That is good for business. Unfortunately, business always looks at the next quarter, and this needs like the next decade. And that tension between the timelines between 2.5 months and I don't know, 250 months or 120 months is something that we're not able to resolve.
Great, thank you.
Okay, very important comments and questions from the Undersecretary. And I think the issues related to the examples, yes, we have good collection of good examples. I think Singapore, Korea, and Japan provide very good examples of collaboration with the private sector. The good work of Japan that's going to be continued close very much to your home in Saudi Arabia through the leadership of G20, the good work on Society 5.0, which is initiated by the B20. It has a great deal of relevance to how to integrate not just the public and the private sector, but how to get the society involved with their contribution, not just limiting that to CSOs and NGOs, but with the community at large, with a kind of emphasis on the local impact, with good budget that should be designed. Unfortunately, again, the issue of budget is a very big challenge. I keep mentioning that. I think UN DESA gave us a report that up till now, more than 100 countries submitted their priorities for 2030. Less than 10% bother to put some sort of numbers attached to them. This is going to be very much difficult if you want really to take these kind of policies seriously. Good examples of budgets at the local level, you can get it, for instance, from the state of Haryana in India that did a fantastic job, or the Medellin in Colombia. They have a fantastic budget at the local level. On that, it's basically the kind of division of labor between what should be public and what should be private. There are areas of work that the private sector cannot ever do, even if you provide all grants and guarantees, and vice versa for the government and the civil society. And finally, now the globe, wow, we're safe. Okay, and the issues related to the shareholders, to the very good point there, I think they are getting more sophisticated. And based on indices, I'm happy that 12 years ago I initiated, when I was in government, the sustainability index with the Standard & Poor's. And each time I check, I see the performance of the Egyptian Stock Exchange is better with the sustainability index. When they do well and do good at the same time, there is no contradiction. But that definitely needed this kind of sophistication of the client, the shareholders, as it happened here in this country when the sharks are more, to see that the shareholders of oil companies made a very important vote that they need to be compliant with the Paris Agreement. That didn't really come from government or the executives. Very finally, everything today could be measurable, and the impact investment, including for the non-tangible, is basically about that. If you are financing a project and you are claiming that it's going to be having an impact on gender or health or education, you need really to put the metric that you are going to be accountable with. And this is basically the 9 principles that were designed not at desks at IFC, but in partnership with the business community. And I'm happy to share more of that. But we definitely running out of time. 2030 is tomorrow when it comes to development.
Great, thank you. Madam?
Great. I think all the points are very valid, and I will go back to my gender piece as always. I made it a point to check the numbers before I came on this panel. Even today, global average is that women are paid 65 to 75% of what a man is being paid in the public sector, in the banking industry, in the healthcare world, everywhere. If we are going to do that, there is a burden of unpaid work on women, plus there is a burden of women being paid less. That directly translates to women not having time to work on additional professional development, to work on career development. That leads to women not being represented at the table. That leads to not having women voices. That leads to lack of long-term thinking. I think women bring the long-term thinking to the table, and if you don't have them, you're never going to achieve sustainable development goals. So back to, you can fix it right there. If you can bring gender parity at workplaces, trickle it down to your investments, to people you invest in, to organizations you invest in, I think that would be the beginning of achieving SDGs and gender parity and long-term results. Thank you.
Great, thank you so much. Ali?
Yeah, thank you. I think last week, Amit and we had a discussion in London on carbon disclosure by the banks. It was a humongous task, and it looks like it's going to become a reality sometime very soon. So if carbon disclosure, such a sensitive thing for the banks, can become a reality in the near future, gender I think is much easier to integrate into the reporting processes. And to your second point on whether the banks are listening to the newer generation of the customers, absolutely. I think that is exactly what the new strategies are. And if you I'm sure if you are aware of Triodos Bank in Europe, I think they were the ones in Europe, they started that journey, and earlier on, very popular. And one of the things that Islamic banking is becoming very popular is the ethical standards. And I think that's the intergenerational dialogue that we are seeing represented in the customer choices. And then to your Excellency's point on the government's role and the private sector role, I think we benefited from the innovative approach of the government in Bahrain. I also chair a Sustainable Development Committee of Bahrain Association of Banks, and we are working with your government on making the clean energy incentivized for the banks. It hasn't been announced yet. We are doing the pilot, and we are taking the steps, and I think that is one of the most innovative programs that the government of Bahrain has agreed with Bahrain Association of Banks. Across the region, there is no example of that. So there are clear financial incentives for the banks to move into that sector and private and finance the clean energy solutions to the businesses. And I understand that your government is also looking at incentivizing the same financing arrangement for the households. And I think with that, it's a clear example how how basically the key levers, as the question from Canada was, that how this catalyzing force of the government and the public side can be used to incentivize the market forces. Thank you.
Great, thank you. Rebecca?
Thank you. And I was going to make that point on short-term, long-term. We have shareholders of our own, and there's almost a relentless focus on the next quarter's results and balance sheet and income statements, which those methodologies have been around for decades. They're really sticky, and people pay attention to them. It is changing, though. I think with governments, there are a lot of opportunities to partner. Having supportive policy frameworks, mandates can be really helpful. In the UK, there's gender pay gap reporting, for example, which has really moved to that agenda. So it can be mandating some of these types of disclosures. And one example there, I'm part of, and HSBC is part of a pilot, which is a UK-China pilot convened by the UN with governments and banks in the region to talk about climate and its disclosure, but also the actions that we're taking. And that's been a really interesting way to get some of those players in the room and talk about the actions and the targets that we can set together. So I think there are some of these examples. Also in the UK, the regulators and the central bank has a role to play, viewing this through a lens of financial stability. And in Europe, there's some talk of green supporting factors or brown penalising factors in capital calculations. So there's also other areas like this which may help too. I think just finally, there is a transition underway, and as said, there is progress, but it's not all going to be perfect immediately. That's just unfortunately the way it is, but I think it's really important to recognise where there are those transitions, for customers to also ask banks, please, to try and progress those transitions even faster, and then also from the policy side to encourage those transitions too. But I don't think we should let sort of perfection not happening right now be a barrier to progress.
Great, thank you. So I think that what's left is just to really thank our partners and thank our speakers. Let's give them a round of applause. And thank you so much. Thank you for our audience for staying tuned as well online, and have a great day.